did SVB affect interest rates? Before I explain the answer, it's very important that you don't make the common mistake that most people are making. The feds do not control the rates on the treasuries. The feds control the federal rate, which is basically what you call prime. So what happened right now is that because of the closure and everyone's terrified about putting their money in banks, they ran and said, let me lend it to the government direct. Why put in a bank that's guaranteed by the government? Let me lend it to the government direct in the form of treasuries. Because everyone is throwing money at the government. The government, in effect, is saying, hey, I don't have to pay that much interest rate. And the interest rate they're paying is bringing itself down. So that in the very short term, you have to borrow money today, you want to lock at that today. However, the treasuries, once everything settles down and dust blows over, you're going to run into a situation where people are going to pull the money out of treasuries and they're going to find other places to put their money in. And then it's going to go back up. And in my humble opinion, I think it's going to even go up higher because there's really going to be a wave. Why put money in the government? At this point, there's probably a lot of opportunities on people that are in trouble. You can invest and buy other things. Number one. Number two, because of these losses, banks now are going to have to make sure that they have more reserves put aside for a rainy day. That means that whatever their cost of money is, and they want to make a 2% profit margin, they're going to have to make, let's say, a 3% profit margin. So by virtue of that, to actually borrow from a bank, they're going to have to go ahead, even if the Fed stop raising the rates, you're going to have to borrowing costs will go up. But even more so, banks need deposits in order to lend out. So instead of them paying 3% deposit rate, 4% deposit rate, they'll pay 5% deposit rate. Add on 2 or 3% above that, rates are 8%. There's a problem there. So net rates to borrow is what counts. To you, will be going up.